What's the first chart you've got for us?
Yeah, thank you. So we're looking at the XLE, and when you look at monthly charts, a couple things suggest that really having gotten coal in your stocking for Christmas might not actually be a bad thing heading into 2019. So when you look at things, a couple things stand out. One is that when you look back, we're right at a very key level of trendline support going back since 2009. So it has gotten oversold. It's been the worst performing sector. But now you're getting to levels that make real sense to consider buying dips technically, not only based on the trend line, but based on it getting oversold. Also for mean reversion, that's hugely important going into a new year. We've been talking about all this volatility. It's really the mean reversion oftentimes where the worst performing sector can start to bottom out. Finally, I would say seasonally speaking, we're heading into a very bullish time for energy. And so as crude starts to stabilize, it's definitely worth considering that energy might be something that starts to show a decent bounce. And even if stocks pull back, it's already suffered a tremendous amount, being down over 25%. Now here's a relative chart. This is XLE versus the S&P. And so on a relative basis also, you see the fact that we've gotten down right to a very important level also on a relative basis. So on an absolute and a relative basis, energy has sold off substantially enough that it might be time to take a look at being selective and buying.
As a side point, sorry, Sarah, you go.
I was just going to say, it feels like energy and the market are very highly correlated right now. I mean, Jim Cramer was on earlier saying that that's the tell, is look at crude oil. How much more correlated now are they than usual?
Well, you're absolutely right. We have seen tremendous correlation. Crude and the market have sold off in unison of late. However, both of them have started to stabilize, and we've seen some decent counter-trend buy signals in crude and in the S&P. My thinking is crude should start to rally into this seasonally bullish period. Historically, it's been February to May. S&P still needs to clear really 2630 to be out of the woods, but I like energy in terms of being something, it's so bad it's good, and really taking a look at selectively putting some money to work as you head into the winter months.